Okay. Yeah, so a couple of updates. I found a really cool app. It's called like Meld Studio or something like that. And let me actually find it. I found it's a really cool app. It's like a free version of like um it's like a free version of like OBS, and it lets you like stream like on um different platforms like to like Kick, TikTok, YouTube, etc. So like I've had like the whole like start posting the webinars like through Kick as well. Like I've had that on my to-do list like forever. And I'm just like, you know what? Like I need to stop procrastinating on that. And I actually kept procrastinating on it. And then I saw this video, and then this guy was talking about, oh, he was using it. Like it was this developer that I followed, and he was like using it. And I'm like I'm like Claude, like what is this app that he's using? He's like, oh, that interface belongs to here, and it's like, oh, that actually allows you to stream like on multiple apps, and it's for free. And I'm like, oh, that's cool. Like, bet. Like, so I'm gonna try to set that up hopefully. Um, but yeah, I'm gonna try to hopefully set that up like within like the next week or so, and then we could just pop in like I don't know, we could pop in live like on Kick like uh, during Asia session or something. Pop in for like an hour, see if there's any trades on UJ. Um, I could do YouTube and Kick actually, and then we can keep our zooms here. But I could also probably stream these on Kick and YouTube as well. But I'll just keep the Zoom like option on in case you guys want to join the Zoom. Um, because something I need to figure out with Zoom is to see if I can put the chat in the recording. I don't know if I can do that. Um, because like sometimes like there's like a lot of context in the chat, and like you can't see it in the recording even if I have like the chat hovering over it. But anyways, that's just like quick little updates. Like, how's everybody doing? Like, what have you guys been up to this week? So you took the same GU trade, but you held for longer. That's good, bro. That's good. That's good. That's good. I think it ended up tapping the second POI we talked about. Oh no, it didn't. Sorry, no, it did not. Because I know in the case study we talked about like pretty much like it's like we have one full sell to buy, right? But then you have the internal, then you have like the internal sell to buy. You know what I mean? So it could always be either or, but like obviously the safe bet is like the entire thing. So like if I'm trading against right this POI, then it just makes sense to take TP here. Um, but the only uncertainty for me was like if I'm gonna use this as a target or if I'm gonna trade this setup right, then because we have a bullish range, then this in and of itself would be another potential sweep setup. So like if I am to take profit here, then I just get out the trade and I'm good. But if I am to hold and like this is a bullish range and this is like a bullish sweep that we can play here, then if this is to convert, by the time it fully finishes converting, I'm already risking like a good chunk of my profit. So like the only options are like hold like a very small runner here or risk like a lot of my profit if I am to not take a lot of partials, right? So like that's kind of like the cost, right? Of like, do you want to take immediate targets because this is the immediate target based on the model, or do you want to hold a bit longer? And so like I said, the costs are going to be: are you going to sacrifice like this much of your profit, for this potential much more reward, which is good risk to reward, but like if it's to fail, like by the time it fails, you're already losing like a big chunk of your current profit versus the total profit that you could have gotten. So it just depends on like what you value more. It's like, do you value what you already have and just close it? Or like, do you want more? And have you done more before? It doesn't make sense. You know what I mean? So that was like my confliction with like wanting to hold a bit longer. But like realistically, like the nuance to that is like you take off majority here and then you keep scaling out. But like it's gonna get to a point where you're gonna get something like the V-shaped recovery here. And so like if you get that type of recovery, then like was holding that trail like that 10% trail like worth your time or worth you know not getting the full TP at like, let's say here, right? It's just like those are questions you got to ask. You know what I mean? Um, but yeah, this was a really good trade. I did this post on um I did this review I think like 2 days ago, a day ago, something like that. Anyways, if you did take the A plus setup, that's actually very nice. Like I said in the video, like that A plus was actually really nice. And the reason why it was A plus is because because this is an external CBOS, equal highs, but you guys know that doesn't really matter. Then you have right the potential structural disruption based on um this being the external high. We have the pullback low, and then we have a pullback high solidified. And why is this one solidified here and let's say not somewhere else? Because you have like low to high, and then low to high. So pretty much what lows create new highs, and as soon as that low that created a high is taken, and if that's taken before we take out the external high, then this is now unwillingness based on the external range, pullback, unwillingness, break, and you have high momentum here. So I'm sure there's like an engulfing somewhere, right? That's like why I like engulfings. It's like they usually show like an engulfing somewhere. I mean, that's why I like engulfing because they show high momentum internally usually, and vice versa. Like high momentum can usually mean a external um engulfing. And then obviously you would have like your entire perimeter here. And like I think that was like even better risk to reward than like my position, right? It's definitely much more, it's like much more probable for sure. But like, let's say six risk to reward. Oh yeah, way better actually. Very nice. And then if you held longer, like very nice. That's very nice. So like if you took that, nice. I just like now it's just like I think I've like if you guys recall like over the past like year and a half or so, like um I think it was like 2024, we were focusing a lot more just on like one to twos, one to threes. And I think that really emphasized or not emphasized, but it really got me much better with like the entry side of things. So now like the only difference between like then and now is like adding a different level, an additional level of structure, or an additional two levels of structure, because really like typically if you were to just take the entire sell buy to sell, then you have like a one to two, one to three, which is like what we were aiming for at first. But now if you can collaborate an additional level of structure, then you can get actually much better risk to reward. So that's really all that is with high risk reward. But now it's just like if you're not able to take positions like this, it's like how are you now applying this like in real time? Like are you using this for prop firms? Are you using this for your live accounts? Like then what does that look like then now? Like what type of risk to reward, what type of reward are you getting for the risk that you're taking? Right. And like that's just like a rhetorical question, right? Um, because like if you guys are actually taking like one to tens and you guys are scanning out appropriately, then there's no excuse to not be making, a really decent amount of money. You know what I mean? And so then if you aren't, then there's a deficiency, and that's like then what we would need to figure out. But yeah, it's just something like that. It's just like with my group, like although we do trade quote unquote high risk reward, like I don't like seeing unrealistic entries. And like you guys know what I mean by like unrealistic entries. Like I will call it out. Um because I just think they give off like bad implications for certain people. And like once people try to replicate their stuff, then it's actually hindering them more than it's benefiting them. Right. So anyways, I actually took this UCAD sell yesterday. If you guys are in the private group, you guys know that I specifically called out like this POI here. Let me see if I could actually pull that up. Let's see. Let's see. Hmm. I think it's here. I would have to figure out where we talked about this. By the way, I think I need to start recording these to my. I need to stop doing these cloud recordings. Like if I do cloud recording on like Zoom, like I did today. Let me guys know what you guys think about the quality. I think the quality is like not as crisp as it was before. So I think I'm gonna have to move back to like um recording to my device. But anyways, we were talking about UCAD here somewhere. Is where I talked about UJ here. Uh, I guess I'd have to find it. I don't recall exactly when I talked about this one, but yeah, I'm gonna have to find that. I'll find that after the video and then I'll send it to you guys. But anyways, I don't want to waste too much time. Anyways, the what we were talking about there, it's towards the end. Oh shit. Um trying to sell this at first was due to the fact that although we had like structural disruption here, there's low momentum here. And so because there's low momentum here and we didn't break a low, then like, okay, we have higher momentum here, we have low momentum here. There's a structural disruption, yes, but that is not really outweighing the momentum in this situation. So I was anticipating this to maybe not necessarily go higher, but I did not expect this to go lower. So I cannot be bearish, but that doesn't mean that I'm bullish, if that makes sense. And so when we were like around here, when I did, I think the video after the what I just showed you, the I think we were like around here. And the one thing I didn't um the one thing that I didn't like here is like if I'm to play, like let's say I'm to play this bearish potential sweep, the issue is that we didn't take out a low. So like if this doesn't take out a low, then I cannot justify this being a sweep because we don't have a new low. You guys know that I need to have some type of low. And like let's look at an example. Because I know I show you guys this a lot. Right here. Right. So you see how the low or the range, that's the sweep range, right? The range that is swept is a new low. So because it's a new low and we sweep that and then we have a perimeter or we have a transition, then I can justify going lower. Right. Whereas here, we don't have that, right? So we don't have that. So like we're here now, right? And so yesterday during Asia session, sorry, we actually yesterday during New York, I mean during I believe it was London actually, we saw this like move here. I think this is very important to note. Why? Because even if you didn't consider this to be like a valid sell, it's an important sell move to note because it was actually a failed move to the downside. So because it's a failed move to the downside, that means that this is technically solidified, right? And so if this is solidified and then we were to come sweep that, then this is now a completely different scenario than if we were to, let's say, be here, right? So you guys know that how we get to a POI matters. This is important, or it matters just as much as like anything else that we use. And it could even be something of the highest importance because if something is to do this, it's much harder to justify a sell than what it did doing this. Why? Because actually, like the failed sell move here actually now gives us a different narrative for this being a potential distribution. And for this to be a distribution now, we now see equal highs. We see a failed scenario, meaning that we can actually now have like an internal sweep here. Right. And although the deviation is a bit high, I don't like how deep that deviation is. I like more importantly that we solidified this high. And usually I would like for equal highs, equal lows. If I'm to ever play equal highs, equal lows, I would prefer for them to both be solidified points. And I would only play them after they are swept, right? I don't play them as target. I don't play them like as something that reads the bias, right? Although they are potentially good targets. Like for example, let's say here relative equal lows are a good target, but my target here is not equal lows, it's low the range, which is this, right? But we'll come back to that. But anyways, we have two solidified highs that are equal highs, right? And then that is swept. And then if we look internally, we got a decent move here, right? That was like the initial move. And then this is the real key here is like I like seeing high momentum, right? So if I see high momentum, I was a bit unsure just because we were like in Asia session, right? But although we were in Asia session, there's like I do compromise the Asia session rule. That's why I like to say that I don't want to just rely on like let's say a sweep of the Asia range or like something like that. I know that's like a very popular like saying in the space, but like other things need to align in order for the sweep of an Asia range to be valid as a perimeter to be used for a position, if that makes sense. Like I care more about the structures inside, I care more about the models inside than I do about an Asia high or low being swept. So by default, if I am to apply that logic across the board, that means that it is not unreasonable to think that I can take a position in Asia and have it be a winner. But I have put like a couple of limits on that. Like I don't like to trade EU. I don't like to trade GU during Asia session because for the most part, EU and GU, Euro and Pound, they usually have their high liquidity session immediately after Asia. Whereas let's say a UCAD and let's say like a UJ is actually like Asia is actually prime time for like UJ. Why do I say that? Because you guys know, or you guys know that I've told you guys that majority of the volume for UJ actually occurs during Asia session based on like the past like 5 years of data. And if we look at DXY and we look at UJ, then they're not really that correlated, right? So if they're not really that correlated, and I see that majority of the volume is happening during Asia, then that means that the weight of the yen versus the dollar is in favor of the yen, or at least not in favor of the dollar in comparison to like EU, GU, etc. So because of that, I can justify taking a trade for UJ in Asia. And then the same thing with UCAD. It's like UCAD primarily, I would anticipate this to be a New York pair, right? So if it's primarily a New York pair, then it's not unreasonable to think that I can get a good position during Asia because this is not something that I expect to always have volatility during the London session. So there's the occasional UCAD trade that I'll take during Asia. And the cool thing is like this is also like an intraday setup. So because it's an intraday setup, then if the timing doesn't really matter to me if the setup is there, especially if I'm looking at anything above like a scalp. So you guys know that we've been super bearish on this, like on every scale from like the daily, the weekly, right? Like the weekly, we've been talked about that, right? The daily, we've been talked about that. The H4, we've been talked about this, right? And then so now it's like the internal. Okay, we have high, low, retracement, but the retracement, although it may be deep, you guys know that I don't like deep retracements. The momentum is technically lower, but we are technically overextended, which is why my target is actually this by a sell to buy, sorry, and not the actual external low, because also, like if I'm also considering like the swing time frames, then we just swept a very important low. Hence why I anticipated this to give me that pullback. But now it's like, now that I see this kind of just playing out, like if we are to now take out this sweep range here, which is relative equal lows, but that doesn't matter, right? If we are to now take this with substantial more volume or more momentum, then we would get a really good daily closure. You see? So if we get a really good daily closure today, then we get a really good weekly closure today as well, which would mean we would continue lower. And obviously my next target is like here from a weekly, you know what I mean? So like to collaborate all of them together, this is only really working out because this is bearish like on every scale. Right? It's bearish like on almost every single scale. Um obviously this has to be bullish in order to pull back externally, but based on every major scale, we're still technically bearish. So because we're still technically bearish, then I can justify looking at these intraday moves to continue that external bias, although, right, the immediate level above me is against me. And that's fine. That's okay. Like I need this to be going against me in order to get a good premium in a sell and a good discount in a buy, if that makes sense. Um, but yeah, any questions with this? Does this make sense? Really nice distribution, like really good deviation. And actually, now that I think about it, I know exactly when I talked about this. Well, if you guys have any questions or concerns about that, it was in this one. Oh, why is this quality like that? That's okay, much better. Yeah, any questions, concerns with that trade? Does that make sense? This is where I talked about the GU trade. If you guys are either in the members only or if you're in the private group, if you're in the private group, um then this is where I talked about it. It's like 15 minutes into the last case study. But yeah, any questions, concerns with that, guys? No, no questions. No, no, nothing like that. But yeah, I do want to get to the part where I do say like the bias. I think it's like a couple seconds away. And this is where I'm mentioning. I'm not gonna play the audio, but like this is where I mentioned that we didn't break the low, the range. So like it's not really a good sweep, but that's why we were waiting for potentially that. And like let me go back 5 seconds here. Right, the reason why this is important is like to have this, and then this. For that to be, would be the ideal entry, is because like if we're technically bullish, then I need something to fail internally to justify the deviation of the sweep, right? And like if that does not occur, then I cannot justify the trade, which is like why I'm saying now with the scenario that I actually took, it's actually way better. Right? I actually got a better condition for the scenario because one, two, we actually had the equal highs, but that's swept. But then we had the internal transition here. And like this internal transition would not have been enough if we did not get this failed reaction here, because now it's an unsubstantial new high and it's an overall deviation. All right, so does that make sense? Yes or no? Make sense, maybe? No? Cool. Any questions on this? Could you explain? I mean, like the deviation is just like like I just don't have a better word for it, but it's like it's the extension of the range per se. Like, let's say, let's go back to my GU trade. So like obviously we have a range. So like the extension of the range is the deviation. The extension being, and obviously if you guys have the sweet blueprint, like you guys know what the threshold for that is. But let's say the threshold is here. I'm not gonna give out a number, like it's in the book, but the general consensus is like as long as my deviation doesn't reach my threshold, and then I have my confirmation, then I have a potential scenario for a sweep to occur. Right. So if my deviation is to occur, and if my deviation is to not reach a threshold, and I am to have my transition that I like, right? And then if you even have another confirmation, that's like bet the house kind of trade. You know what I mean? But the deviation is just the extension of the range. Does that make sense? Like extension as in like a fib extension. So like, but like I just don't have a better word for it. Like the extension of the range is, I guess, another way to put it. But um I guess deviation sounds cool. And like I think the Wyckoff guys say that too. So I think that's pretty cool. But yeah, really cool. Like all of my trades this week look pretty much the same, except for like UJ. but I mean, even this itself is like a deviation, right? Like, I mean, you guys see this, like it's a continuation deviation. But like the problem with like taking these is like one, I'm in a premium, so like therefore the justification is like this. Like you need the internal model, and you need a very clear internal model. If not, like trying to trade something like this is a bit difficult. Right, but other than that, I didn't really look at stuff. I heard AU has been moving pretty nice. I'm not gonna lie. I think I've heard this is like moving pretty nice. This one actually gave, wow. Okay. All right. All right. All right. Good. Go off. That's cool. EU also gave a good one during Asia yesterday, but like I said, I don't like to trade EU during Asia. But like, I talked about this one too in the in the um in the group, and this one is interesting now because like this is I mean, like I can now switch my like my range, right? Like this is now like the range in play. I just didn't expect it to just be like one quick swoop and then go. I didn't even give like a reentry, whereas UCAD did give a reentry. Let loose. Yeah, yeah, yeah. I mean, yeah, like I said, like it's you don't have to be against trading during Asia. You just have to be a bit more responsible with it. Because whenever I was trading my kill zone, like the 7 to 9 period, I just felt like that was restraining me too much. Like if I'm gonna take the setup, like I'm gonna be confident in the setup, and like I don't need like a time restraint. Like if the setup is there, I'm gonna take it. And that's just kind of one of those beliefs that I've wanted to break to. Like just like there's all because there's always volatility. That means there's always gonna be setups. So now it's just like if there's gonna be setup throughout the entire day, like Asia, New York, London, then if there's then the like the edge then is not the time that you trade. For me, then it's the type of setup that I trade, and like and if I can have a good set of confirmations for a model to be valid, then that would give me more edge than just the time of day, because that gives me the flexibility to take a good scenario during New York, Asia, or London, right? But the frequency of trades is not really as high as it could be, but that's good because then the quality of the trades is higher, right? Yes, no, maybe so. Anyways, this is cool. Like this is playing out. But cool. Do you have any case studies today? Oh my god, excuse me. Do you have any case studies today? Mm-mm-mm. Ah, see, I see this. Look at this. Look at this. This is like forever like my argument against like against like POIs now. Like I am on strike against like POIs these days. Um or against like traditional SC and efficiency. Right. I'm like really against that now. Um it's like look, you're gonna save yourself so much fucking trouble. So you can see that this trade, it's a sweep. This is my USD CAD scenario. It's like look, like there's two things you can do here. Use the internal sell to buy or the external sell to buy. Right? The internal sell to buy being this, right? Or you could say you can go even further with the internal sell to buy, but I don't really like that one. Or you could use this, but like this is something that's a bit conflicting with me as well. Is like if I'm to trade like this one here, right? That buy to sell, then I see this top, right? Then like it would make me ideally want to do something like this. All right. And it's not really like my best. Like that's not really like a good risk to reward. But because I think that was let's see. Let's see. Here, yeah, I mean that's the setup I took. Like that's why and like I actually got a perfect entry on that. Like I literally got like zero drawdown on that. Because I actually had like two sell limits. I had like one at the open and I had like one just above it. But the second one didn't hit, unfortunately. But yeah, I'm kind of on strike against that. Let's go through some case studies. Um yeah, I mean, just like we're kind of fighting momentum here. So like I would wait for this to sweep and then see if it like gives me a setup. But yeah, it's just like we're fighting momentum here, you know? Like we're gonna learn this the hard way. Like I learned this the hard way. Like just stop fighting the momentum. CVOS. You know what I mean? Like because like the entry may be good itself. Like it may be a good entry per se, like in terms of criteria, but like the direction is like not good. And like I think this is also in play here. So if that's in play, um, and then we have, let's say, this sweep here. Oh, my bad. And so we have this sweep in play. That's taken, right? And then if there's like a setup here, then that's like a good setup. You know what I mean? But there's no setup here. But that's like a good ideal case scenario. Like if I have my narrative printed here, bearish momentum, um, potential buy to sell. You could also argue like um a sweep, right? And then you have an internal sweep. But yeah, I just wouldn't fight momentum here. That's really just it. I mean, yeah, equal highs don't matter though. They don't matter. Pending liquidity is never going to influence my bias. Like if we sweep liquidity, then it's an actionable thing now. But like if it's pending, then it's not really like I don't really care for it. Especially like there's different arguments to that too. It's like I can make the argument of like equal highs, like okay, well we're trading CFDs, and like if CFDs have different price sets, then like maybe on a different broker it doesn't have equal highs. But like I don't want to use an argument like that. I'd rather use my other argument, which is like if pending liquidity is there, then I don't really want to influence much on that. But if they are to be swept and the characteristics of that sweep are to be XYZ, then I can use that as an actionable process to to take a position, right? And that is a little bit more universal because like let's say now we're trading with like futures and stuff where like pricing is like centralized and all that. Okay, well there's equal highs there, like I should play against the equalizer. No, like that's why I keep rule number two, which is like I'm only using liquidity as like an actionable cause after, or as an action, or as something that triggers an action right after they are acted upon. That's why we have DLE, like direction. You can say liquidity, right? You can say liquidity. You could even say liquidity here, right? And then it's execution after that. Exactly. Yeah, there wasn't no fuel for the sell. So like that's also like the other thing that I like to say. It's like if it, just because I'm not like if let's say this is obviously this is bearish, right? Or this was bearish, but like just because I'm not bearish at the time does not mean I should be bullish, or does not mean that I should buy. You know what I mean? Because there's like if there's a possibility here that there's a bullish setup on a bearish overall trend, it's like yes, I could take a buy, but this buy is because I'm not bearish at the time. So if I'm not bearish at the time, that does not mean that I have to buy. That because at the end of the day, this could just kind of roll over, and that's like not really in our control. So like what is in my control is when I do trade and when I don't trade. So like if I know that this is bearish and I know that there's a potential bullish setup, that doesn't mean that I have to take it because I'm not bullish. Right. So although there's a buy setup, that doesn't mean I have to be bullish because we're in an overall bearish scenario. So just because I'm not bearish at the time in a bearish overall trend, that doesn't mean that I have to buy. Yeah, I mean, then just close the laptop. Like if like this is what I do, bro. Like if I don't see a setup, like I don't like sit on the charts anymore. I just minimize the window and like go do something else. I'll go load up some code or something. Or I'll watch a YouTube video. Like it's not really that deep. Like there's abundance of setups, and there's always going to be like abundance of setups, even if it's not in FX. Like I'm sure there's a bunch of crypto setups. Like look at this shit dying. Oh, it actually recovered. Wow, wow, wow. Interesting. 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 I mean, I'm still bearish on this. Like I don't see this going up anytime soon. Like I don't see this making a V-shaped recovery. Like that would be crazy, honestly. But yeah, just close the laptop. Like I don't know why. I just refuse to trade these, man. I refuse to trade these. I don't know what it is, man. I just refuse. I don't know what it is. I guess I just don't like the behavior sometimes. That's also why I don't like gold as much either. Because but yeah, let's see. What have you guys been posting on here? Yeah, yeah. Like that perspective of understanding a pair. Yes, like different pairs have different nuances, but I think it's like at first it was like individual pairs like for me. But I think once I grasped a bit more experience with just like trading itself, like there is a very vast difference between how asset classes move, if that makes sense. Like I don't treat it now as a pair. I treat it now as an asset class. Like by default, right? FX is gonna trade way differently, way more different than a commodity, a metal, etc. Right? Or an indice. Way by default, right? By default, because they're just composed of different elements, different things come into play. They're active at different times of the day. So like whenever that's why I primarily stick to FX because I know the ins and outs of FX, but like I don't know the ins and outs of indices. I don't know the ins and outs of commodities and metals. So um for example, US oil, like I know a lot of people are trading this, and this looks actually hold on. Like this looks pretty bullish. So like I would have to learn the ins and outs of the asset class in order for me to justify wanting to trade it more, especially like trading it like intraday and scalp. You know what I mean? Because ideally, like if I'm speaking like in an ideal world, I would much rather actually want to trade like gold and like oil and like maybe indices, but I would really actually want to get into like commodities and metals because there's much more volatility to them. So because there's much more volatility to them, then my commission fees are way less. Like if you're trading like on a CFD account, and you guys know because gold moves so much more than an FX pair, your lot size is way smaller. So because if you're what you're because your lot size is way smaller, whereas if you're trading like three standards on an FX pair, you're trading like a 0.25 like on a gold, right? The difference in commissions over time is very drastic. And I noticed that after I started like really I really noticed that a lot more with ASEV and stuff. With like the gold automations, like I don't really pay much in commissions because yeah, that's actually doing pretty well too, I think. Um I don't want I don't want to show my login. But yeah, this is moving pretty well. It's still moving decent. So at 40% now. But like this is a key example for me now because like if I trade like five lots on like a gold, I mean on a EU GU UCAD, my commissions compared to gold, it's like it's way different. It's way, 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 way different. So like ideally, like if I have like a multi six-figure account, right? Or like even a six-figure account, because honestly, I wouldn't want to have more than like a quarter mil in like a trading account. Um, like if I have like six figures in an account, then ideally I would want to trade a commodity because my commission fees are going to be way less. But luckily, like because like I know brokers and like I have IDs and stuff, like I can actually get rebates on my stuff, which is cool. Which is why I have the IBs. I don't really have the IBs for people to join. I have it because like I get rebates on my stuff. Um, but because of that, it's offsetted so that I don't have that big of an issue. But like if I didn't have that, then I would ideally want to trade metals and commodities just because of the volatility aspect. And like I've seen a lot of people like trading like the German whatever, like I think it's G30 or something. And that looks like it moves really nice. I'm not gonna lie, this looks like it moves really nice. Like just look at these trends. These are so like nice. Like what? Like I love seeing like a market like this. This looks so nice. Like I forgot who it was that was trading this, and I'm like, bro, this looks nice. Like just look at like this is yesterday. Like what? Like this is a perfect scenario. Like this is a perfect sweep here. Like, and this is just like off the bat, right? Like right sweep, and then if we're looking at the internal, right? Luckily that breaks. One, two, sell to buy. I mean buy to sell, sorry, and then SL at the high. You aim for here. That's already like a 1 to 5. And like and let's see how many points it is. That's a big stop loss. You know what I mean? Like that's the big stop loss, which is good because then that means that like if I'm aiming for like good decent target, right, or even if I let's say I'm pushing it, that's already 1 to 5, and like my commission fees are way less on something like this than compared to like a EUG, right? So hope that makes sense. Um, so yeah, I don't think it's a pair thing anymore. I think it's an asset class thing, and then also like I am biased because I only trade USD, and like obviously most USD pairs are weighed through USD. So like that's why they move similarly to an extent. So it could be asset class, and then it could be like the common the common denominator or numerator of the assets that you're trading. Like if you're trading like personally, like I would only ever if I was to trade one asset class, it would be USD. It would be maybe yens. Um, I think that's like the only two I would ever do. It's like either all USDs or like all yens. But yeah, do you have any questions? Yeah, so internal reversal BOS, external CBOS, but then this is like the big change. So this is the reason why you win. This is the sole reason why this trade won. This dude's name is Meow. Are you fucking kidding me? The fuck? That's funny. It doesn't say how long they've been in my server. Sir May. Um, let's see. Any more case studies, guys? Any more questions? Oh, okay, we do have some case studies. Cool. Are you on the call, whoever this is? I appreciate you putting on the badge. Um, I noticed that. I think, did that like yesterday. Let me open these. Hold on. Okay, I don't like this one. I think I would rather see. I want to see a little bit more. Like I want to see, like we're clearly like playing this, but like I want to see a little bit more. Maybe like we get a pullback. See this? I think I'd rather see. I want to see a little more. Bro, why is I'm not even gonna ask, bro. Like, do you? But like, if people don't take you seriously, like, I would say that's probably why. Um, anyways, do you, bro? Just do you. But yeah, I would want to see a little bit more on that if I want to justify it. But I mean, yeah, it looks like you're fine. Looks like this is probably gonna work out. Uh. Yeah, so that ended up working out. I didn't get what I wanted. I would have rather wanted to see something like that, and then I would have taken the trade. Um, but like we swept a low, we didn't sweep a high, and then we didn't break the low again. So like I would have just probably exited around here, anywhere like around here, break even ish, because now it's just no man's land. You're like stuck in the range, and like a range is also like don't think of it as like an invalidation. Think of it of like uncertainty, because a range can result obviously in a reversal, which it did here, or it could be a continuation. But like it's unclear which direction it's going to take. I would obviously lean more towards like the opposite direction because of like if we're going down and then we pause and we're stalling, then I would expect it to go up. But like the reason for exiting here because we're stuck in the range is not because of the anticipated reversal. It's because we are not clearly continuing down because we're obviously taking this position thinking we're going to continue down. So okay, a little bit better. I would have liked for this to take this out though. Take this out, and then I could use the entire reference point because then you have the full buy to sell. I don't like that engulfing either. I don't like that at all. But um, I don't know. That engulfing's throwing me off. But yeah, you see, this is what I like. I wanted to see that whole thing break because then you could use the entire reference zone as like a buy to sell, and then you have like a clear target. What's your second target? Let's see. Oh, I guess this would be another decent target. The next low here. Yeah, that's decent. Yeah. But yeah, I hope you see what I mean here with waiting for this. If we wait for this to fully break, then you're now fully confirmed that this is a buy to sell. Right here, like technically, because you broke structure, although there's a sweep, this is an assumed sweep, not a confirmed sweep. So like yes, we're barely sweeping the high, but it's not fully confirmed until you do this, until you break this, because then this is now a buy to sell. Okay, so what's the trade? Oh, I mean, I don't see a trade here, bro. Like, did you take it off the M30? So your entry is on the so your entry's off the entire thing. I mean, I don't like it. I don't see a model here. Like if you're gonna trade the M30, trade the M30, like zoom out. because that looks like an M5 scenario zoomed out, if that makes sense. Like, for example, like I took in my GU trade. Right, like my GU trade is like an M5 scenario, right? But like it looks like you're trading an M5 scenario that's zoomed out, like or that's yeah, that's zoomed out. So like an M30 zoomed in scenario. It's like saying that I'm gonna trade. It's like saying that I'm gonna trade this whole thing. I'm gonna trade this whole thing on the M30 or something. But like no, it's like if I'm gonna trade on the M30, I'm gonna trade on the M30, and that means like I'm gonna trade the M30. Like I'm gonna have enough data, and like I've always found it difficult to like know how much data is considered like a metric for that. And like if we look at my setup here, if this is a M5 setup, that's like 600 bars, right? So like I don't know like a number yet, but just be conscious of it because like if I'm on M30, well like really if we can say we could even argue it's like an M15 setup. So like let's say yeah, it's looks a little better actually. It's about like 200-300 candles. That's like kind of like my good number. Yeah, about 200-300 candles. So like it's like saying that this M15 setup, it looks like it looks like this is what you're doing. Like it's an M15 setup, but like you're looking at it from the M1 or from the H1 and you're just using the hold zone. And like now look at the difference in data. You have 50 bars. So like if you're gonna say you trade a certain time frame, then you should have an adequate amount of data, candles, etc. in on your chart at one time. And I personally like I haven't tested it, but like my sweet numbers, like just based on every time I bring it up, it's been like 200-300 candles. So so yeah, so like if it's like here, like I want at least 200-300 candles of data on my chart at a time. All right, I think 360 from my setup. Right, just like around there, like it's not an absolute number, but like I hope I just get the point across. I don't like the setup at all. This is you're picking a low here. You're picking a low. This is bearish. This is bearish. Right. Now this buy is slightly better, but your invalidation is here. But no, this is not I don't like that buy at all. Just off what you're giving me too. Like,
The screenshot before shows where it
oh, wait, hold on,
was.
hold on, hold on, hold on. Why is this?
I mean, after it. I'm
Hold on,
sorry.
hold on, hold on, hold on, hold on. My bad. My headphones. What the fuck? Oh, hold on, hold on. Uh-huh. Hold on, say something. Maybe I can hear you.
Yep.
Oh yeah, yeah, that's better. Uh-huh.
Yeah. So the screenshot after it shows more so what I was looking at.
Mm-hmm.
Um, and I gave the very last screenshot was what all the trades were based off was a possible spring from accumulation coming from DXY or US dollar. Um, and then USJPY showed you the 1 hour, I think.
10 minute.
Oh yeah,
Or is that oh you have more
that's
history
another
than that.
pair for you. Yeah.
Yeah, so like I still don't like this. Like the because you're picking a low here. Like sure you could say it's a spring, but it's not a spring if this is a low here. Like an accumulation is like
No, no, the accumulation came from the US dollar. I'm sorry, but for that, the POI is more so. I got taken out um with the news, but the POI was more so what I was looking at, and because that wasn't invalidated, where I drew the fibs on,
mhm.
I kept the trade going because I just saw it as just taking more liquidity, and we already had more momentum to the upside already. We were already bullish, and so I just saw that as more of a LGC. And then once I got the disruption,
I,
because I
I'm
also
confused.
viewed.
I don't know. Hold on. I don't know what you're referring to here, bro.
Sorry, sorry.
I don't even know which picture to refer to.
So the very last picture.
Uh-huh. Ah, okay.
I
Mhm.
started
Yeah,
that the week.
this is the accumulation I sent. Yeah, yeah, yeah.
Yeah, I started the week looking at that, and so when I go back to USJPY, there was I was viewed it as a LGC all the way to the left.
This one. Wait, you have two setups here. Okay, uh-huh.
So one, yeah. So once I viewed the LGC, all that was the second
Where's the
entry.
LGC?
It's the other screenshot. I'm sorry.
Okay, this one? Oh, the other one?
Yeah, LGC is all the way to the left, to beginning, where I drew the POI.
This?
Yeah, yes, I drew that as either unwillingness or like the disruption coming from the liquidity graph to the left. It was underneath that.
Oh, okay, so you swept the slow.
Yeah, and then we went bullish with high
Mm-hmm.
momentum into the POI. We stayed in the POI because the news brought us bearish. So
You're
I
talking
can
about this?
no, that was my first pull, and then I bought from there with my invalidation below the low.
So this buy here is here.
Yes.
Okay. Yeah, you see, so like everything you're telling me, you should be able to express this on a chart.
Sorry, I
So
was on
like,
my phone.
no, you're good. I mean, no, it's fine. I'm just letting you know because like I can't follow, like I can barely follow you. So like that means that there's a problem between there's a gap between like what you're saying and like what's shown on the chart. So like if you breach that gap, then you're able to actually show me what, or you're actually even able to show yourself what exactly it is that you're seeing. So you got a better picture for yourself and for me.
For sure.
So like you see, like if you have this here as the entry here, then this automatically should be here because just based on what I'm seeing, it looks like you bought here. And like here, I see that this is sweet, but like I don't know that you see this as an LGC
Yeah.
because then I can tell you if the
Understood.
LGC is right or wrong. You see what I'm saying?
Yeah.
But like then it looks like you bought here again, and that looks like a good buy. But
Yes,
like,
and I both
mhm,
times. That's why I drew it that way.
mhm,
So I
mhm,
didn't want to like too much mess. And then I bought a third time at that next POI I drew because the only reason that I showed the bigger, I want to say long position, was because on that bigger long position I was like, okay, this is news, so I shouldn't get scared. We still respected my invalidation point, and we had disruption internally.
mhm,
So now that my direction is still bullish, I aim for the high of the range leading up into my higher POI, and I wanted to stay bullish.
mhm. So like this one, like this scenario here, your target is here because you're looking at a what, like an M5 move. So like I would target here or at least take the majority off here, and then like obviously you have a chart stop because you have an internal LG. So like if that's the case, then obviously if this breaks, then this is now not bearish, but it's not bullish. So then obviously it then changes again with this high momentum here, and which is I'm assuming like where you bought again. But like if you're buying here, then your valuation is here, and then your target is here. And that I'm not opposed to because like you're kind of playing against, you have an external bullish move, then you have an internal sweep here, and then that structure is broken. So I would anticipate this to go higher based on the POI, which is good. And I would aim for here. Um, but it seems too cluttered, bro. Like you're trying to fit everything into one time frame. Like I need like more time. I need more charts. I need more detail. Like because like it's hard to follow what you're telling me. Let me see. When is that
Understood.
at? When is that at?
And I should also mention that that next buy was leading
Yeah, like
into
I definitely do still see that because I did see this here. I was actually anticipating this yesterday too, seeing this sweep and then hopefully get us set up and then go higher. Because I want to aim for at least here, but like I just need a little more clarity like on your side.
Mm, understood. I could send you why I took that next buy.
This one,
Yeah.
this is another setup. Uh, And like this looks like just off of the other candles, this looks bearish. It looks like you're bearish and you're continuing bearish. And you can see here.
I only pulled that because of liquidity grab and the accumulation from DXY. And we had a
Oh,
10
okay.
minute.
Hold on. Let's kill this belief right now. If DXY is bullish, that does not mean that you buy USD XXX and sell XXX USD. Like that is it is not that simple. I use DXY for EU, right? I use EU for GU. I use EG for EG for GU. For USD CAD, like I don't even care about dollar for USD CAD. Like don't just because you're bullish on DXY does not mean that's like a full reference for what dollar's gonna do across the board because USD CAD, AU, EU, GU, UJ, they're all different pairs. So that belief needs to like be cut today.
For
Like if
sure.
DXY is bullish, I'm not gonna just because DXY is bullish does not mean that I'm gonna or it bearish does not mean that I'm gonna spy USD CAD. And like also think of like the scale that you're referring to. Like you're referring to the DXY on the daily time frame, right? So just because you're bullish on the daily time frame and then you're trying to buy USD CAD on the M5 time frame based on that correlation, it just doesn't make sense. You see what I'm saying? So like I would cut that belief. I would only use DXY for EU, period. That's it. I would not use it for UJ. I would not use it for UCAT. I would not use it for GU. At least not for now, bro, because it looks like you're being swayed too much by dollar, by DXY, and like that should not be the case.
So I looked at a micro transition um to correlate. I wasn't trying to do it only, but I certainly
Yeah.
agree that I shouldn't
Mm-hmm,
be,
mm-hmm,
you know, trying to defend a full position based off of dollar.
mm-hmm, mm-hmm.
On the 10 minute,
So
there was a inefficiency fail after sweeping the liquidity on both sides because I was still bullish on it. I actually drew POIs with the continuation from each point, but then we swept both lows. And when we swept both lows, there was a 10 minute inefficiency fail followed by a 15
are you
minute.
talking about DXY or UCAD?
I'm talking about UCAD right now
Okay, okay.
because the daily bullishness on for the accumulation on dollar is just a reference point. That's not what the
Mm-hmm.
trade is.
So where is this 10-minute inefficiency fail?
So we swept both lows after we were continuing higher. Then the 10 minute efficiency came on the leg all the way to immediate,
Where like, but where? Like I'm on the screen.
all the way on the right. You got to zoom in.
Uh,
All the way bottom. Very
here.
much bottom. Yes.
Oh, okay.
So there's a 10 minute inefficiency fill with a 15 minute engulfing. And I'm just holding the position. I'm not like I was looking for the continuation to stay bullish. And I'm holding it based off the bias of being bullish, but it's not truly off of just only dollar.
Okay. So you didn't sweep this slow, I think. Oh, actually, you did sweep this slow. Okay.
That's why I
Yeah.
pulled that.
Mm-hmm. So the only thing I would say that you should consider is like this. Like you could work out, it could work out, right? But you're catching a falling knife here, and like this is internally bearish. That's why, like, in order for me to be bearish, like I needed to have this transition here, although we were still bullish. So like I needed the combination of right the sweep and the transition in order for me to be bearish. So like in order for me to be bullish now, like I need this to go sweep this low and then have another sweep again, and then now I can think about being bullish again. And that doesn't mean it won't. That doesn't mean that your position won't win, but it's just like I'm not gonna buy something that just fell for the entire session like 50 pips. You know what I mean? And so like, and also like if you're gonna trade a micro, if you're trading a micro transition, then you're gonna pay attention to scalp timeframes. So like the scalp time frame is clearly bearish. So why not trade a micro transition that favors the scalp bias? You know what I mean? Because now you're trying to correlate a minor intraday, a major intraday, because this is potentially a minor major intraday move that you're talking about with it being a bullish move. But like if we're going to those time frames, like where is this bullish? You know what I mean? So now you're only really going off of a micro transition, but like the micro transition is just what begins the scalp pullback, right? So like in order for you to trade a micro transition that favors the scalp, then it has to be in alignment with the scalp. You know what I mean? So like I hope it wins, you know what I
Yeah.
mean? But I just find it hard to justify that. Like even now, like this is in play, you know? So like I would much rather see like a sweep to go lower than try to pick a low and like chase the reversal. Because eventually this will work. And this is what I talked about too with I think his name is a Nagua or something like that. Like where he was like saying that he takes like a trade like on a demo trade, but it's a trade that he wouldn't take. Like that's so bad because the second that you take that demo trade on a trade that you wouldn't take and it becomes like a really big winner, it's gonna sway your emotions. It's gonna sway your bias opinion so much. So like I'd rather just practice good habits from the beginning. So if you're on demo, like you gotta take scenarios that favor, in my opinion, like the directional bias, but like the directional bias is depending on the type of trade that you want. So if you want to take a scalp, then you have to rely on minor intraday and micro for the entry. And I would preferably like to be in biased alignment with like the minor major intraday. You see what I'm saying?
Yeah.
So we'll see. We'll see how that works out. But yeah, I think you're just picking a low here. Like there's not much supporting you like here. Like maybe if we even do like this type of sweep, all right, maybe I'll think about being bullish. But it's also Friday. It's 12:30. So
I looked at that too, and I also read a book recently. I think it was like how to trade commodities or something like that. So how I made $1 million trading commodities, and it was talking about like how Mondays are bullish or how Fridays always lead into bearishness of Mondays. I'm sorry. Um, so I was thinking like we could possibly get that sweep too, because I don't think the bias is wrong, but I definitely can see your viewpoint with it picking a low. Like, and
mhm.
I, I'm still getting it. Like, part of this is also me journaling. That's why I appreciate you telling
Yeah,
me I
yeah.
need to mark better.
Yeah, because like I would be bullish under X scenario. That doesn't mean that your bias is wrong. I'm just saying the bias is aggressive. And then like books like that, like how you made $1 million, this and that, like you got to think of the context too. Like think of when that book was written. So like if that book was written and it's saying that Mondays are usually bearish days, but it was during the conditions of a time when the market was fully bullish, then if the market is not fully bullish today, then those points are specifically not ideal now, but maybe the
No.
principles are.
Yeah.
You know what I'm
Yes.
saying? But yeah, let's see. Are there any more? I think that's it. Did this guy chase the trade? I hope he actually got like this trade. That would be cool. Um, but yeah, I'm really proud of this Peter guy here. He's come a long way. He's come a long way. He's one of the private members. Yo, Brian, why do you not have my tag on, bro?
What's up?
Why do you not have my tag on?
Do you have to have whatever premium Discord to use those?
No, 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 no. You just go here. You just go here.
Oh, okay.
It's just a part of the server. No, the premium members are the purple ones. Like this guy's public.
Or I just meant
Yeah, just
Discord
ignore that.
Nitro. You
Yeah.
don't have to have like Discord Nitro.
No, no, no. You just have to be a part of a server that has it.
Okay.
Like I have to pay the nitro to get that on my server. Mm. But yeah, I think stuff is progressing nicely. Yeah, I like the activity in the group. I actually like that was like one of my biggest like goals was like because I had gone inactive for a bit in the old public group. Um, I think that was like last year, maybe. I don't know, a year or 2 years ago. But I'm glad that the group is healthy again. Are there any groups? Do you guys have? Are you guys a part of any groups that are like active like this? And like, I don't want to say like health. I don't like. I don't know how to put it, but like the activity in the chat is like organic, and it's not overflowing, so it's like sustainable right now. But like, are you guys in servers that have something similar? Yes,
Uh,
maybe. No,
Similar to this one, no. There's other
no, really.
there's the focus in this one is just very different without like having too much noise and like other conversations and other stuff. I don't know how to explain it either. This one just
Mm.
stands out.
Yeah, I've been because like I'll look through other channels. Like I'll go join other channels to see what's up. I don't really speak in them, but I just go see what's up. Especially I was doing that when I was looking to build the Discord, see how I wanted to build this. Like I just go see like how others have it built. And not many people had like a good built Discord server, unless it was like some of like the popular like mentors and stuff like that, because those guys all like go through the same like marketing service. And so if they go through the same marketing service and they all have the same videos, the same layouts, the same everything. Um, so as I was going through them, it's just like I don't really see many good groups. Like it just seems like people are lost and clueless. But like I guess that's also the cost of like the type of content that they make. Because most people cater to like beginners and like they post like, oh, how I made $10,000 today, how I lost $15,000 today, how I like this is what you should do to fix your trading, like shit like that. And I guess that's just the cost of that type of content. It's like more attention but less quality trader. But yeah, unless you guys have any more questions, I think that's good for today. All right, cool. But yeah, I guess that's it for today. Hope you guys have a great weekend, y'all. We'll be in touch.